Arali, they focus on the kind of companies they've invested. I would say Cylinder, which is a robotic software company, and Finbox, Hbox, Visfreight, and Outvision. They are mostly focusing on the B2B marketplace, Industry 4.0 tools. Those are the areas they really focus. And if you look at Arun's career, it started from Sonata to Infosys, IBM. She also founded a couple of companies. Then he's been in the system. He's one of the VCs who also just not fund, probably help them in the entire process of sales and there's more problems for a startup just than money. Technically they are one of the few growth funds that they put the fund and they also help you to grow. So that's about Arali Ventures. And it's Prarip. Prarip is a very old into the investing space. When I say old, is more experienced. He comes from the Parampara years, and he's been into the IDFCs, private equity, large fundings, and everything. So he's technically alternative private equity funds with the IDFC, and so he's into multiple firms, early stage opportunity funds, and after a brief stint with Global Infrastructure Partners, Prarip joined Jatin and Venkat to form this company called Inflexor Ventures based out of Mumbai, and they've been investing in they've invested in companies like Bellatrix Aerospace, they're into deep tech, Gram Cover, PlayShifu, the augmented and virtual reality based toy firm, then K Logistic, Atomberg, we all know, so they're into deep tech, and so if you look at it, it's more of even if you look at Java now, we know this within most the anchor. He's been visiting this place for more than a year, and one request is when we are trying to raise him funds of funds, I told him one thing is you need to promote the startup things. You need to bring more VCs to the city, so they get exposed to what's happening in this part of the world. Probably they might see a brilliant startup, but they're not good enough to be funded. But probably in a 6 or 1 year, they can be noticed and they can come back. So we're just trying to create a platform for we're connecting Bangalore and rest of India to this. And Java has been brilliantly working in the deep tech space, and one of the very few micro VCs who have got 3 founders, and he focuses on the deep tech space. There's another co-founder, Brinda, she was the ex-virtual CFO of Mama Earth. What else?
Both Yoga Bar,
Yoga Bar, and many. And Prarip is into SaaS and health tech. I think it's a very rare combination. Very few VCs. Sometimes, yes, they are good friends. At the same time, sometimes they also compete for good deals. And a good entrepreneur, one thing what I've seen is good entrepreneurs choose the investor, right? It's because it's the kind of focus. It's just not money. Anybody can put, a real estate guy can put 10 crores and it's not going to help you guys. Technically, it's going to be a growth fund. The money which comes with, for example, how I'm going to recruit a person, what's the culture which I can bring in, and how to look at challenges. Who will do a PR? Like Prabhu was telling, after the second round, I think the guy will be next took care of the entire marketing for themselves. And it's a freewheeling, right? So technically, how we can be part of, we can't do all the work. How we can create a system to do it. So with that, I leave the stage to the 3 prolific investors and people who believe in Coimbatore. And really thanks for coming. And yes, stage is open. Please don't think anything is silly question. Everything starts being silly, and probably we can have better understanding. I think this is not going to be the end. This is going to be the beginning of many such events that we will be promoting in the Coimbatore. The only aspiration is to bring this region closer to the finance world or the venture world, and bring the venture world closer to the city. Thank you.
Hey, thanks, Arun.
So, what prevented VCs from, getting a foothold in this region? Why aren't you guys here yet?
Is it specific to someone or anybody?
No,
Anybody.
anyone.
Okay, maybe I'll take a first shot. Why they haven't been, right? I think it's like asking, right? Like if water is available at 1 feet. 10 feet, right? Like, what's the choice, right? How much do you want to dig, right? So I think the current situation is that's the choice situation, if you ask, right? But how to make sure that we can go? Maybe I'm willing to come 3 more feet down, and can you come from 10 feet to 5 feet? I think that's the attempt of doing this, right? I think that's like a very analogical answer I'm giving. Maybe somebody else can give a.
You did see traditionally, even say till 2-3 years ago, you didn't have to. A lot of VC didn't have to go searching for deals, right? Just that deals used to come, good deals used to come, and you just had to pick the right ones to invest. That also is difficult, by the way. It's not easy, but still, you didn't have to go searching. Now the market is maturing, right? I mean, compared to how it was in 17, 18, the number of funds are more, the capital is more, right? So obviously, there is also, it's also becoming specialized, right? So then people start looking at, okay, where do I get the kind of businesses that I want to focus on, right? Where do I get different kind of entrepreneurs? And that's the whole attempt, right? And we heard in the first this thing, right? 80-90% of capital goes to say 4 or 5 cities. That is not sustainable, right? I mean, it is obviously, you just can't say these are the only 3 cities from which entrepreneurs come. Entrepreneurs are everywhere.
This question is generally to the VCs. Okay. Basically, for an early startup, I see a resistance in investment from the VCs. For my, I just did the pitch, right? So with that understanding, I'm just asking. We have a very confident, vision in our journey, and we have the projection also laid out, and we are sure this, for generating a revenue to stand by itself and grow further, it would take say 2 years. The basic understanding from my side is that what we seek fund for is to travel this 2 years or make that 2 years to catalyze as 1 year or less than that, so that if we can infuse fund. And right now we have done only in, the pilot is done in Chennai. To copy it in other locations, we need funds. So instead of bootstrapping, if I go for fund to be raised, then I can catalyze my journey and I can make it faster. So, but when we pitch, what we understand is that let you get some traction, let you get some revenue, then we will come. So basically, the expectation is for us to get there. A support, not just the fund, also the mentorship or whatever. Why should we require? Why would we require when we are already there? It is going to scale further there. So, whom should we in the sense like early startups? Whom should we contact? Is it the angels or VCs? Are there VCs for that particular category? Or probably we have started pitching during the lean part of, because we see that even similar ideas had been funded heavily during the COVID time. But right now it's like kind of very slow down. So, but generally this idea, for it to scale up, we need funds. Should we go connect with angels or should we do by ourselves? Because doing organically bootstrapping by ourselves, it's going to take time. So, or should we, are there VCs for that?
Let me take a shot. Yeah. Go ahead. It's nothing specific to your study, and my answers will be generic to anything. First and foremost, not every business is VC fundable business. That's a fact of life, right? Second thing is, any business which is supposedly VC fundable needs to grow. As Prabhu from M2P mentioned, they took money when they thought by taking 1 rupee of money, they will grow 5 times, not 2 times. Because the cost of capital of a VC business is very different. We don't look for, 20-30% IRR. We are looking at 10, 15, 30, 40, 50x of our investments. So the cost of capital is also very different, right? And there are not those many businesses which can meet and match that cost of capital. Let's be honest. Let's be true to ourselves. So people need to understand that perspective, where obviously people who are not from that line of business, it's a difficulty in understanding that expectation. Third, not every problem of an entrepreneur can be solved by capital. Doesn't matter whether you go to a VC or an angel investor or your parents. Every problem in your business cannot be solved by capital. And most of the businesses which are growing, doing exceedingly well, they are either bootstrap businesses or have raised very less amount of capital. You look at Apple, you look at Google, you look at, for that matter, in the Indian context, DMart. It's a retail business, right? You would have heard of DMart. I don't know whether it is there in Tamil Nadu or not. Right? DMart is hugely working capital requirement. Lot amount of inventory. Same issues of inventory, working capital, logistics, scale. All those things are, everything is there. But if you look at their balance sheet, they haven't raised, primary capital into the company is hardly anything compared to the market cap that is today, or even when it got listed at 30,000 crore and at that balance sheet. At best maybe $100 million, that's it. Google is at best $40 million. So not every problem can be solved by capital. So you need to figure, okay, look, what is it that this capital is seeking? Is my business attuned to that? If it is not, let me perfect and not go for scale. Let me perfect my problem or the value prop that I am in a single geography, in a single area, in a single segment, so that I iron out all the problems in that business, have answers to everything, and then go to a VC saying, okay, look, I know these are 15 problems, I have solved for everything. Now I need money to go from 1 to 10, from one geography, one city or one town to 10 towns. People will give you. The reason they ask you, show me some more traction, show me something, is because they see problems, they ask you questions which is not satisfactory answer, or in their judgment they think you have yet not found a solution for it.
Yeah, I mean, the thing is what like Pratik mentioned, right? Only say 5% of companies overall might actually be VC fundable, is my guess, right? Because it calls for rapid scaling, it calls for ability for a business to grow really fast and become a large company in a very short span of time, right? And so that's one aspect. Secondly, from an entrepreneur's perspective, or no VC has ever created a business, right? Never in the history, right? VC capital has never created any business. They have gone and invested in businesses that were becoming big. They have made mistakes as well. But so sometimes when you speak to VCs, they might be hesitancy because they are not able to see in their heads, right, that this can be a real good business. And that's why they might come back and say, but they don't want to say no either. That's why they come back and say get more traction. So partly the reason is they are not sure in their heads whether this can be a fast scaling and a big business. But they don't want to let go because in the VC business, it's a business of, it's only business where you can make 80% mistakes and still be a winner, because the one company that you invested in went on to become really big and 80% of the other companies failed, right? So it's one of those businesses. So they'll say come back for traction. So you should assume as an entrepreneur that my chances of getting VC funding is very, very low at the onset. That will drive a very different kind of behavior. And then you go back and see what you can do, right? And if you're basically getting the traction right, then obviously VCs will follow.
Just to add a little more color, right? You asked about stages of investors and all that, right? I also keep telling founders, right? You just need one believer, right, in your business. I mean, there'll be thousands of VCs in the country. You just need one person who believes in your story, right? I mean, it's also your effort to find that one person, who would believe in your story and vision, right? I mean, that's the optimism of optimistic way of looking, You just need to find that one VC or one investor, and there are multiple stages of investors. You can take angel money, you can take micro VC, there are syndicated investments. So there are lots of options before even the larger folks, right? All those options exist, and you just need to believe that you need to find that one person who believes your story, and that's like a connect that has to happen. That person's life story maybe has some connects to this. They may buy that story, right? Sometimes decision making in VC, right, I keep telling, is not dependent on, it's dependent on all the factors, market, founder, profile, all that, right? It also boils down to who I am, where I was born, what's my growth, what did I see. If I can relate to it somehow, I may be absolutely convinced. Or also in your life, if you have a kid, right, you may be convinced about a toy company. Example, I'm saying I have been in the past like that, right? So your stage of life also sometimes decides what companies you find attractive, the problems that you face in your childhood. So that's why I'm saying, there is no real framework ABCD XYZ you meet, right? Oh, okay, I should get funded. I mean, that's not happening. A lot of people ask me, if will I get to like 100 crore revenue, will you fund me? Or like say I'll get 3 more customers, will you fund me? I said, I don't know. I mean, there are so many other things to depend on. So that's the answer, it depends, is like a consulting answer, but that's what it is. Very contextual, very, very relation to, and sometimes founders knows VCs well, they believe that, they were in the same hostel, that also gets funded, yeah. So, I mean, what rationalization should I do for that, right? So it's very hard to give a straight away an answer.
Last one thing, right? I mean, I see this a lot nowadays in everywhere. I mean, in more in the larger tier 1 locations kind of thing. People want a VC funded startup, but actually look at us. We are investing in a business that will grow fast, and that's the mindset that sometimes we look for. Are you building a very fast growing interesting business? Then I will partner you. But if you are looking at I want to build a VC funded startup, then it doesn't work, right? And it's a slight difference in terms of how you think about your business, how you want to scale, how much have you thought through, how much have you already gone through. If you look at, there's, like you said, you can build a business, the same kind of business, even without capital. All that capital does is accelerate. It is not going to come and solve the problems for you. Just give you.
Don't build a business for VC. Build a business, VC will come. That's what I think.
That's exactly
what Arun's saying. Yeah, we can get to the next one. Yeah. Manoj,
I think he mentioned limited partners briefly. Of course, last few months deal flow has slowed down significantly, but are VCs actually under any pressure from LPs, or is the whole dry powder thing a myth?
This is a question I didn't expect, in the room in a way, but okay, I'll give my view, and I'm sure everybody has a view. Deal flow again depends on the stage at which it's kind of getting limited. Dry powder is a powder which is not with us; it's sitting somewhere else. We just have to call for the powder, then only you shoot at it in a way. So in a way, dry powder everybody seems to have. At least there's no question about that, right? Everybody has enough money which is sitting on the sidelines. But what slowed down is decision making at A, B, C, and right, it's like kind of slowed down. You're not seeing a lot of action there. It usually comes from outside capital, like the Tigers and the SoftBanks and all the other folks, right? At like the stage that I operate in, or even Arun operates it, which is pre-seed, seed, and just below CD, say. Obviously, Prarip operates pre-series all the way up to B plus, right? Kind of. At our stage, I think the deal flow is not like reduced, because that's what we look at, like about 120 to 150 on an average every month, right? So it's not reduced. But decision making is much more deliberate, much more time consuming now. Or it's not time consuming, we are consuming time. Let's put it that way. Like during 2021, sometimes we have to decide, like imagine in like, say 1 week, do 2 calls, and you have to decide, because some deals are moving at that pace, right? Today I don't need to do that. So the deal making pace is come down to a reasonable place, if you ask me. Valuations have tapered a little bit. All that has happened, and there is no pressure as such, I feel, I think valuation tempered, people have expectations tempered, which is a good place to be in for some time. And also it's a very 10-year cycle, right? So one down, one up, one more down is kind of okay. I mean, nothing, it's very uncorrelated to the public market. So I'm not even worried if the public markets goes and up and down, unless there's a World War III, right, which is a dramatically different scene. I'm not worried really, you know. We are like continuing to deploy at our own pace as we speak now. Yeah.
Yeah, I have one question. I have been into this automobile after sales since last 10 years. So there is a startup in my own field which got miserably failed in recent times. There is GoMechanic. So I have been monitoring them because I was in charge of Kerala also. I was in charge of Tamil Nadu operations. So I have been monitoring their performance because we used to see other competitors' performance like Boss Car Service or GoMechanic or T-Serve in Bangalore. So I understood that they are not at all growing. So our market is not at all going to them, not even 1%. But somehow in the last 5 years they are able to increase their valuation and they are able to raise more funds. So my question is, what is the checkpoint the VCs or venture capitals or any capital firms have to check the integrity of the actual business happening in the market? Because as a common person I could able to see it's not growing, but they were able to raise around 5 rounds of funds.
Anybody invested in the GoMechanic here?
No, but I'm generally asking.
I'll give you a generic.
Yes, I'm generally asking.
Yeah, I'll give you a generic answer. Like I said, this is a business where, as a VC, I can go wrong 60-70% of the time, but I can still do very well, right? And sometimes, so what does that mean? That means that I invest in interesting ideas, right? And with the potential of, if this plays out, if this works according to plan, this will be a big company in 7 years. Obviously, in that journey, right, things can go wrong, right? Things can go wrong, things have failed. A typical VC will model for anywhere between a 30% to a 60% failure of companies. So that actually then we're saying that we are going to invest in something and we are going to try something new and we are okay with failure. So that part of it, GoMechanic specifically was a different scenario because they had other issues. But companies going down or failing is not a problem for VCs. Okay?
Understood.
GoMechanic specifically, there were other issues. Maybe it was, I don't know what
Misreporting of their accounts.
Yeah. So that boils down to founder ethics, that boils down to what the VCs, how they drive the companies, all of that. That is individual VCs to individual companies dependent. Right?
No, I think we try and see, you know, all have integrity, but it's like you have leakage in your business, right? It's an occupational hazard. There'll be some fraud, right? Like in any business, right? There'll be some leakage, some fraud. Given that we said you can make a lot of mistakes, even though we don't go with an intent saying, you know, I'm going to make mistakes, but it does happen, it plays out, and we factored that in the business model to play that out.
Okay, sorry. When I say mistakes, I'm saying mistakes in terms of this investment not playing out to plan. Right? I'm not saying I'm going to invest in a company that's siphoning off money.
Yeah.
That's what the mistake is. I might think GoMechanic will become a big company in 7 years. It is not. Right? Okay.
It's an occupational hazard. So if you're doing a trucking business, right, there's so much leakage, right? So owners try to cut. It's like sometimes such stories will happen. Even if you check for integrity, do all the circus that we want, right? Somehow this will happen. And we have factored that into the model. Obviously, it looks bad when you look at it. Oh, they are putting money and, you know, it's all, they're not doing anything, right? But that's factored into for most people in a way. You expect some things to go wrong.
Okay, thank you.
Actually, I tried reserving this question to the end because we started discussing about GoMechanic or the deal making space, right? Because I feel like I have worked on both sides of raising funds and also deploying funds. So what probably like the hypothesis which I have started my building the product, right? Okay, to give a context, like I am not.
Can you get to a question much faster? It will be easier for all of us so that others get a chance also.
Sure.
Yeah.
So for the investors, like when you're looking at the company post-funding side, like where you're looking at your MIS, which goes into your SHA and stuff like that, like do you think that the companies are in a ready state to share the MIS which you are putting as a clause, like in terms of even if it's a quarterly, the information disclosure from the companies to the startups, how much is the readiness with the type of or early stage investment which you are making in the startups?
take little, I'll take you that. So our companies, all of them send an MIS every month. It doesn't have too much detail. It just says revenue, expenses, number of new customers, very, very basic information. Then it has one more sheet, typically lowlights, highlights, what is the action for next month, and what is the ask from the investor. That's all we ask, especially at a very, very early stage. The MIS does come. It's like, it's not complicated math, right? You're just putting how much you're spending, how much is in your bank, how much have you spent, and you can do that, right? I mean, if a business person cannot do that, right, I think they need to think about it, right? That's like a very basic thing, right? If you don't measure, that's as good as, not doing anything, right? Really. So people have to measure. So you need to get up to the task of saying, I am able to do a basic idea of what the finances are and send a simple report. And most people are capable, I think, it's not about the capability.
Okay, the question I asked is not about the capability of the founders.
They do
or the
send.
companies,
I'm telling
but
you.
It's more about the bandwidth, because every month they are trying to cope up with it.
If you think that is not possible, you should not be in the business.
Exactly, or not take VC funding also, right?
Not in VC funding, you should not be in business. As simple as that.
Yeah, you get
If
what you
telling,
measure.
In spite of, don't you brush your teeth? Don't you manage your household expenses? How does this, it's as basic as that. It's basic hygiene.
Basic hygiene. No, I mean, it's a question of, see, largely we don't expect great MIS kind of thing, right? But typically we see it brings a discipline in the founder's head. And that's what is important. It is not my business. My job is to shepherd the business. Founders basically try and grow it. But they have to start thinking about their business. A lot of this is in some ways helping them think through their business.
Think through. Next round, a new investor will ask you, what did you do as an investor? You need to be ready to, if you're willing to grow, you will have to do the basic hygiene. You can't say, I want to do hygiene, I want to do business. Then you can run however you want.
So if you're saying bandwidth issue, as I said, I have heard people saying, oh, fundraising is tough, and as a founder, I don't like to spend time fundraising. Then don't be in the business, don't come and ask for money. Because no matter who the founder is, whether he's a sales guy, he's a CTO, he or she, right? He's a CTO, he's a product guy. In the end, a founder is always a salesperson. When your business is at an idea stage, maybe you're selling it to your family, telling give you money, angel funded. You're selling it to your family, saying, let me take my time off from my job and do this. You're selling it to your investor, you're selling it to your early employee. You have to be a sales guy. You cannot say, oh, I don't know sales. No matter how articulate or inarticulate you are.
I think you owe it to yourself, if you're running a business, first of all, to look at the basic math and hygiene.
And our early stage people are looking for just few things every month. 3 things which has gone well, 3 things which has not gone well. What I plan to do in the next 1 month. Broadly.
What kind of support, apart from money, what kind of support we can expect from VCs?
So there are different kinds of VCs, right? And each one brings a different flavor to investing, right? So typically, if you remember what Prabhu said, they are your champions. They will go and basically speak to you. Every VC does this, right? They go and talk about their portfolio, help you think about next round of funding, get the next investors in, create name for you in the ecosystem, right? Help you with, say, regulators, help you with all the other people in the ecosystem. That part every VC does. Now there are some VCs who try, depending upon what kind of outlook they have, they might work with the founders on thinking through product, thinking through go-to-market, thinking through technology, all of that. And some of them will say, okay, my job is to basically go back and invest. And I'll invest in the portfolio companies and I will support to the extent I can, maybe connect you to people, and that's. So it depends on, there's no standard rule saying this is what VCs will do. Right?
I think you will have to go and find what you want and the VCs that suit you. I think that's something that we did last time. You just find what do you really need, and there are some VCs who will do certain things, some VCs will not do, right? So I think you should take a shot at that. Like for example, I put that company outside that Eat Better, right? It's actually our portfolio companies. I thought, let them get some exposure to a newer audience, so that, that's like a small thing I'm saying, but that's a thoughtful thing to kind of simply do something like that. There are multiple ways you can think, connecting to next round investors, connecting to clients, connecting to bankers if needed, investment bankers, and there are credit programs. A lot of small things that add up to some amount of value. Yeah.
So it's a very valid question, right? And the way I would like to frame it, just the way you have product market fit, you need to have founder investor fit. Very important. A wrong life partner, you have a way out by filing for a divorce or a separation. But a wrong investor, there is no way out. You have to live through the journey. There is no separation possible. So that's first fundamental 101. Just the way product market fit, PMF is important. Investor founder fit is also very important. So that's first. Second, you need to know what are the gaps you have and where is it that you need help. Self-evaluation, self-introspection. And then you need to articulate it in terms of your expectation to whomsoever you are meeting. Otherwise, many a times it is a case of mismatching expectations. Like in any relationship, it goes for a toss. Right? So that's also very important. And then some people will tell you, okay, look, I like your business, I like to invest in you, I know these are the gaps, but hey, look, I can't help you in it, but I can give you money. Fair enough. At least the person is honest or the fund is honest and putting all the cards on the table. It's not over promising. And you might genuinely find that fund or that entity likable to say, ठीक है, he may not be solving my problem other than capital, but I'm happy to take that fund along. Vis-a-vis, you would also see people who might be in your relevant space, might have a better nuanced understanding of your business and may be able to help you. Right? And different people come with different skill set. Like I'm pretty sure Arali, run by Arun, Rajiv, they come with an operating background, mindset. The value add that they give is very different, or the inputs that they will be very different. Right? In our case, I come from an investing background, but Jatin and Venkat, they've been tech entrepreneurs, right? Even their Venkat still loves to code. So many cases, the technology architecture, the product rollout, we deep dive into it. Key hirings, we deep dive into it. But in cases which is not within our competency, maybe we will reach out within our network, as Vinod was saying, to ask for help or assistance who can help some of these companies in certain form and manner. That's what it is. But the two most fundamental thing is investor founder fit and knowing what to expect. Very important.
You had a question.
One last question, sir. When you're investing in a pre-seed or seed, what comes first? Is it the founder or is it the idea that you guys invest on?
So I have it boils down to you. Like I'm like I from my pattern, right? I've observed I'm a very market ready investor. Like I like large markets, interesting, innovative marketplaces. Founder is important. I'm not saying it's not important, but I end up going with the market more. And then obviously the founder also is looked upon. But there are some folks, who clearly say, look, I want to see, what the founder is. So I'll bet on the founder first, and then, the market will play out. But I believe, the market always wins. You put a great founder in a bad market, right? Market will still win. You put a great founder in a great market, obviously, that's the story, right? But otherwise, always the market wins. It's like my theory. And I kind of, I'm biased to the market. Different styles again. Each one can have their own style.
We have a very radical thing. It's always founders first. In the same product, same offering, I will bet on one founder and not bet on 9 other guys who are doing the same thing, right? Because there's a clear thought process that these guys can deliver. They have understood what they've understood what is the business, what they want to do, and the 9 guys, our assessment, might not be able to deliver. And might not be able to deliver is not from a pure a business perspective, might not have the ambition, might not have XYZ in our assessment, right? That is required for us to go generate a return. So the only one thing that I'll add to what Vinod is saying is the market ready is an assessment we make, right? Because you can't be too ahead of the curve and then you will fail because the market is not ready. But as long as we know the market is ready, and if I have to say choose between three founders, it's not tech, it's not product, just the founders. And that's the basic, at least the way we look at it.
That's a philosophy, like some
At least at a seed stage, because when we go in, there is no great traction, there is no great revenues. I mean, most of our investments are pre-revenue, right? It's just question of, have these guys thought through, do they have the experience to deliver, and stuff like that we go back.
So, valid question. Different people have different styles. And we do both seed, series A, series B, throughout, right? So you have founder and market, both are 50-50 for us, but we will still put founder ahead. And there are 2-3 reasons for that, right? Because we very well know in our line of business, there will be only 1 or 2 winners. If I am investing in say 30 companies, there will be handful, as Arun was mentioning, right? So for sure, if those are winners, market needs to be large and founder needs to execute well. But at the same time, for a significant large majority, either there will be scalability issues or some other challenges, right? And our experience has been, when the times are tough, it is the people who take things out of those difficult situations and not the market. And that's where our belief is, founder comes first. That's number 1 reason. Number 2, no matter what you do, in the end, we are transient investors, right? Even Prabhu from M2P mentioned people are traders, they come, they sell and all. At all points of time, whenever things are going good or whenever things are going bad, I will always look up to the founders to give my investment an exit, an outcome. Whatever it is, good, bad, doesn't matter. 10 times, 1 time, half a time, 3 times, doesn't matter. That's again where founder matters. So we are pretty clear on that. Even Stevens, from an opportunity perspective, founder market is even Stevens, but founder is always ahead of market in my assessment, always.
I'll just add one question which nobody has asked. What is the easiest way to reach you, make your life easy, the person who's asking money's life easy, to get a quick answer either yes or no?
I think we've kind of put our emails out. That's the fastest. It's on my Twitter profile, my partner's LinkedIn profiles. It's also on our website. Typically, any cold emails, we take about 15 to 16 days. You will get a response back from us. We may not be able to give you like individualized feedback, especially because we're looking at like 150 companies on the emails. But that's we do get back. That's the easiest way to reach out to us. But you should also understand one other interesting aspect of how to reach right. If you actually write a thoughtful email, most people would respond. But we have a process to respond to every cold email. That's what we put together. But if it comes through some network or a connection, right, it adds a layer of, I would say, belief or some trust. That human nature again, right? If it's coming, say, let's say I know Arun says, look at this company from Coimbatore. It gets a little more value addition. So at best way is if you can find a connect to that VC somehow within your network. If not, obviously, use the cold channels. That's the best way, at least for us. Again, it all depends on how the VCs built their pipeline and channels. Some folks, only go through some networks or inbound. Some ways, I'll ask Arun and Prarip to add. We are like absolutely open to receive all kind of cold emails.
Yeah, I mean, reaching, see, a VC will look at every email that hits his inbox, right? Because He's always worried of missing out that one deal that will give him a 40, 50x, and he's not seen that email, right? So every email they'll read. Now it's a question of whether they have the thought process of responding, whether they will actually respond. Some of them will say they might just not respond. Some of them will, like we not say we make it a point to respond to every email, right? So reaching out is cold email. Obviously referral is the better way to go, right? If not, cold emails, they will look at it. Now some of them might respond, some of them might not. But if there is even a little bit of interest, I am sure they will reach out and have a chat. That is given, because the nature of industry is such. You don't want to miss out on a good deal.
Yeah, I mean, you don't want to miss out or like an M2P and think about it a little later, right? We do miss out. I'm saying, it's not like we don't, but we are consciously thinking, there's this errors of omission and errors of commission. So we don't want to commit this error of commission. Omission is we've not seen it. That's like, that's a different reason, But commission is like it's come to you, you had a look or you had a chance to look at, then you committed an error. That's like a massive regret. Basically, that's what it means by commissioning. So we don't want to do that ideally, right? So we have enough processes put in place to try and cover that, error of commission. In spite of that, it might happen.
So maybe understand your question better. For us, as he mentioned, reaching out today to anybody is not an issue. We are all, but maybe that's why. Yeah. So. That's why I wanted to clarify, maybe what you wanted to ask was not to us, but in general, to the VC community or people of a certain fund, how do you reach out? B, how you should reach out? And A, will you expect a response or not? I think C has been addressed. A is a warm connect or a cold email, both works. But what should ideally be in that email is maybe a 2-line about what you are doing, your current traction, right? How much you are looking to raise, and what are the 3 milestones that you would want to hit with the money that you are raising.
One more thing. There is enough and more information about what VCs specialize in, what they focus on, right? So sometimes I see a good mail that actually says, hey, you look at you specifically, a mail to me directly. Arun, you look at robotics, you look at IoT, you look at this. I'm writing to you specifically because I looked at your LinkedIn profile. He's done some research. He's done some research in terms of knowing what the VC focuses on and then setting a mind. That always helps, right? So what we tell people is just do some basic research. Don't send a consumer deck to say Arali Ventures. We don't look at it. They're everywhere saying we only do B2B. Similarly, don't send a late stage 40 million deck to say Java Capital, right? So that part of it, you should, if founders are able to do, then it becomes higher chance of getting a response.
Arun's dating example will work perfectly, right? You should know how to convince the lady, and obviously what characters that the lady like. Maybe. Yeah. No, you are looking at the mail like for like first 40 seconds. If those 5-6 lines are impressive, right? Then you say, okay, let's look at the deck now. Attach the deck. Open the deck. So you will spend like 5 minutes on the deck max, right? If it's not impressive, right, you've lost it there pretty much.
And also I've seen most of the people send the entire deck in the LinkedIn.
That is not.
Nobody sees it. And technically a lot of people send friend requests to VCs or stuff.
That is still. Why? No, you should use a note option in the LinkedIn, right? A lot of people don't even say like, I want to connect you. I mean, like that's not going to help, right? Be very specific, right? I'm building this startup. This is what it's looking like. And can you share your email? I actually share it on LinkedIn if it's a very thoughtful one. If they just randomly say, I want to connect in your professional network, right? I'm like, thank you. I mean, I'm like, not possible.
Out of my experience of a big VC which reached out to the mail, Shankar, I mean, he's mentioned, hey,
Uska free marketing ho raha hai, thank you.
This is joking. No, it's just technically it's a big VC. So technically what we say, I send a message saying, hey, I know you've done your first close. Probably you will be looking at deployment at a certain stage, and this is a VC. Immediately he replied because he was interested to know that
you had noticed.
I understand that first close. Okay, first close is something you understand the VC world. So let's talk, let's meet.
Yeah.
So it was a quickest, it means about you need to do a lot of research.
Yeah. I think last time we did a session on exactly how to reach out to a VC.
Say, hey, what's your name?
Yeah.
That's the most stupidest thing a lot of my friends have done.
Yeah. So we did one session last time exactly, how to target a VC. Like almost a 1 hour session. Yeah. Okay, last question I'm assuming. Yeah. Okay. Okay. Pattitadam. Sampath, go please. Yeah.
This question is.
Okay, we'll try and take it. Networking is also there, so we can, you can get hold of us there also. Yes.
VCs are very much interesting in investing in tier 1, tier 2 cities. But how to expose village and rural places have a best opportunity for revenue to the VCs? அதாவது நான் என்ன கேட்க வரேன் அப்படின்னா டயர் 1 டயர் 2 சிட்டிஸ்ல மட்டும் கான்சென்ட்ரேட் பண்றாங்க விசிஸ் எல்லாருமே. பட் வில்லேஜ் அண்ட் ரூரல் பிளேசஸ்ல இதை விட பெஸ்டான ஆப்பர்ச்சுனிட்டிஸ் இருக்கு. ஸோ அதை எப்படி நாம விசிஸ்க்கு எக்ஸ்போஸ் பண்றது அப்படின்னு ஈவன் எதுக்காக கேட்கறேன் அப்படின்னு பாத்தீங்கன்னா எங்க ஸ்டார்ட் அப்ஸ்க்காக நான் கால்குலேட் எடுக்கும்போது ஒரு 100 வியூவர்ஸ் இருக்கிற ஒரு பிளேஸ் ஒரு வில்லேஜால 2.5 to 3 crores ரெவன்யூ per year கொடுக்க முடியும். ஒன் சிங்கிள் வில்லேஜ் 100 வியூவர்ஸ் இருக்கும்போது. ஸோ இந்த மாதிரி ஒரு மார்க்கெட் இருக்கு. பட் இது நார்மலா சிட்டிஸ்லயோ வேற எந்த ஒரு areas cover agad, so completely a village and rural places. So இதை எப்படி நாம இங்க கொடுக்கலாம்?
So I think Arun is asking, how do I get villages also you invest in? No, so Saravanan asked that question, right? Coimbatore versus so Prarip answered and all of us said, look, it's not about Coimbatore or it's not about anything, right? It's about if there's a right business, right? We are all ready to invest wherever it is. If the Resha Mandi has happened, there's an animal company, what is it called? Animal. It's a completely market is rural. The founder may be sitting while taking money, the company may be registered in Mumbai or somewhere. But all their workforce is sitting in villages, right? So it is a classic example. Resha Mandi also is a classic example. Fasal, take Cropin from his portfolio. I have a company called Yellow Metal, which is working only in tier 4, tier 3 cities. Market is there. We've all kind of invested, right? So agri-tech, gold loan lending, crop insurance, where else the market is, right? You'll have to go to the villages. Market is there. So that is the nature of investment. If you're asking me, is a company from the village? I think that's not the case. The company probably is from any of the cities, but the market is all that we are all willing to look at those markets also. So we are investing in, village-based, there are some VCs who are Bharat as a story itself, right? Like that's the thesis on investment itself. So there is massive amount of investment going into that area also, especially in agri. That's why these names are like Aqua Connect, again into fishing, right? Then there is Captain Fresh. Again, I can keep telling you, there's like hundreds of these companies now where we see that rural as a massive market. There is no doubt about it because 70% of India is still living in rural, right? There is a massive market opportunity that we are investing in a way. Yeah, last two more, quickly, sharply, the question only, please. Sampath, pass the mic, please.
Yeah, so basically my question is, like as a founder, can someone approach a VC even when they don't need a capital? Like I might not need capital, but there are a lot of other things which you might be helpful for, right?
It's a very smart question.
No, the reason I ask is, when people think of VC, they closely relate to investments and money, right? But there are a lot of things which you can help with, right?
See, we like to meet founders outside of just the raise period, right? Because we like to know, especially for seed stage, right? There is nothing anyway in terms of revenues, a thing that we can sort of use to understand how the business is doing. We like to meet founders early, understand how they think, what are they thinking about, what are they focusing on building, all of that, understand this thing. Having said that, if you just say, I want to meet you for a coffee and you don't give enough context, obviously I have so many other things to do, right? And it's also a question of whether it's interesting enough, what you're saying is interesting enough. But having said that, we'd like to meet founders outside of that investing fundraise period, because then we get time to decide, we can learn along with you, right? We might be able to build conviction. So yeah, it is okay to reach out. But make it clear, make it specific, saying, I want to speak to you for this and this. Then it becomes a lot more easier. It becomes easier for them to refuse also.
So there's this famous thing that goes on in VC. You come for money, you get advice. You come for advice, you get money.
Last question.
Yeah, last row.
What's the procedure to come for advice?
Advice. You ask for advice, right? They'll say, I want to put money there.
I'm an Inflexor auditor. I wanted to understand that, let's say, when you like a startup and you want to go to the contract with the company, do you really look at governance, compliance, or all these things, and for a contract for specific terms, as well as like complying it, They say they're already having a project and they're running it in countries like EU or US, so they should be following some guidelines. So do you really look at those parameters? Because is it better they can follow all those parameters before they even come to you, or you think it doesn't matter, but you can always overrule those governance?
So your aspect on governance is with respect to the company in which the investor is investing, or is it with respect to, you know, some assignment that the company is doing and something like that?
Let's assume the company is it's an IT company and they're dealing with the customer data.
So
and if you are going to invest money on that, and you will be going to have contract with there will be contract with Inflexor company. There's going to be a contract with company and then the client as well. So in this case, so that do you look for those compliance? Whether they following the compliance?
see, whether I decide to invest or not will be depending upon whether I want to invest in a company which is handling client data. If I've decided to do it, I know that's the nature of the beast that he is doing. That's his line of business. Now, whether contract level SLAs are maintained or not, that will not be diligenced, right? Because, or you might do a sample dipstick and look at 1 or 2 contracts. But the point is, if he is not adhering to it, those contracts will get cancelled.
No, so is your question saying, is that a condition for us to invest? Is that what you're asking?
Yes, let's say if you invest X amount of money and they are already dealing with customer data with a particular client, there is a data breach. There's going to be a fine in the future. So when you look for investment, you also look for how compliant.
Yeah. So it's a question of stage, right? When I go in, the customer doesn't have a product at all. I can't tell him you do ISO audit and basically I say first get 15 customers, right? Then see what the customers are asking. If you are selling, if that guy is selling to say retail stores, the retail store is not going to ask him for ISO compliance, right? So it's a question of stage. All of these are important, but what we say is you do this, but think about what is the right time to do it, right? You will have to get it done, but don't waste your time doing ISO audits or InfoSec compliance when your question is whether you survive the next 6 months or not. So get to a stage, and after that, depending upon what risks you have in the business, right, you have to go in for that. I mean, we put a clause, but do we monitor it? Do we say that without this I will not invest? No, because it's a question of what stage I invest in and what's the actual risk to the business. The risk is the company failing or not starting at all, right? Not because of InfoSec, but because they are not built a product.
Okay, so thank you. Thank you, everyone.
Yeah, thanks.